All right, let's dive into Sinopec's 2023 annual report. They're a major player in the energy and chemical world, a global giant, really.
Absolutely a company to watch.
Yeah, and we're going to break down their performance, see how their financials are doing, and what they're doing for their shareholders.
Looking at their strategy is going to be interesting, I think.
Oh, yeah.
Oh, yeah. They're not just, going with the flow of this energy transition. They're
Mhm.
trying to shape it, to lead it.
Okay, I like that. So Sinopec has four main business segments.
That's right.
We've got exploration and production, refining, marketing and distribution, and chemicals.
It's a lot to handle.
It is. It makes you wonder how they manage all of it.
Well, that's the beauty of their business model.
Oh.
It's all integrated, like a puzzle. Each piece connects to the others.
So they can adapt to all the changes in the market more efficiently.
Exactly. That's the idea.
So let's start with exploration and production, E&P.
Sounds
It
good.
seems like they're really putting a lot of resources into boosting that crude oil production.
Yeah, absolutely. They're focusing on areas like Tahe and Shengli offshore, trying to increase their capacity.
So traditional energy sources are still important.
Oh, yeah, they are. But they're not just focused on oil, they're also investing heavily in natural gas production.
Where are they doing that?
Regions like Xinbei, Western Sichuan, Fuling, and Wirong, they're really spreading out.
Okay, so strengthening the traditional sources. But what about renewables? What about this move towards cleaner energy? How does that fit in?
Well, they're tackling that too. One of the ways they're doing it is by developing the Shengli Jiang Shale Oil National Demonstration Zone.
What is that exactly?
It's a project with the potential to really make a difference in China's energy independence.
A big project.
Yeah, it's a bold move, especially with all the environmental challenges that come with shale oil extraction.
Right.
But it shows they're committed to diversifying their energy portfolio.
That's interesting. That's like a balancing act almost.
In a way, it is.
So what about refining? What are they doing on that side?
They're all about modernization and expansion. They've got projects like the Zhenhai expansion and Yangtze refining restructuring going on, all key to meeting that growing demand.
For polymer oil products.
That's it. And speaking of demand, their report mentions record-breaking sales volumes in 2023.
Wow, that's huge.
It is, but refining can be a tough business to be in these days.
Yeah, with the costs and everything.
Exactly. How do you keep those costs down? Well, Sinopec is all about efficiency. They've actually managed to decrease their marketing expense per ton year on year.
So they're getting more efficient each year.
That's the goal.
Yeah.
And it shows they're really focusing on maximizing what they get out of their operations.
Smart. So producing more, spending less, that's a good combination.
It is. Now let's talk about marketing and distribution. This is where it gets interesting.
Okay, tell me more.
They have this vision of becoming an all-in-one energy provider: petrol, gas, hydrogen, power, services, you name it.
Wow, that's like a one-stop shop for all your energy needs.
Right. Think of it like a super gas station, like on steroids, with everything you could possibly need.
Electric charging, hydrogen refueling, maybe even a place to grab a coffee.
Exactly. They're selling an experience, not just fuel.
That is ambitious.
Very. To get there, they're putting money into a network of integrated energy stations.
It's definitely a forward-thinking strategy.
Oh, for sure. But it comes with its own challenges navigating a market that's changing so fast. Regulations.
A lot of hurdles to overcome.
Right. But it shows they're thinking long term, which is always a good sign.
Absolutely.
Okay.
Last but not least, let's talk chemicals.
This is the part that often gets overlooked, but it's vital to their business.
In what way?
Well, they're investing a lot in expanding their ethylene production capacity at multiple locations.
Interesting.
And then you have projects like the Baling caprolactam unit relocation and those coal chemical projects.
It sounds like a pretty diverse portfolio.
It is. They're not putting all their eggs in one basket.
So we've got this massive integrated company producing oil and gas, refining it, distributing it, and even making chemicals. How do they manage it all financially?
That's the million-dollar question, or should I say the trillion RMB question?
That's what we're going to find out next, right?
That's right. We're going to dive deep into their 2023 financial highlights.
Stay tuned. We'll be right back after a quick break.
So let's jump into those financials. Their revenue dipped a little compared to 2022.
It did. By how much?
It ended up just over RMB 3.2 trillion.
Okay, so not a huge drop. Was that because they weren't selling as much?
Not really. Their sales volume actually went up, especially for those refined products.
Oh, interesting.
Yeah, the revenue decrease was mostly because of the lower prices for crude oil and natural gas.
So the prices were down, even though they were selling more.
Yeah, it's a tricky situation. What about their profits? Did those take a hit too?
Let's see. The report says their profit before taxation was around RMB 83.9 billion in 2023.
That's down from the year before, right?
It is. And again, it seems like those lower oil and gas prices played a big part in that.
It makes sense. It's like they're selling more stuff but making less money because the prices are lower.
It makes you wonder how they're managing to stay profitable in such a volatile market.
Well, a couple of things are working in their favor. The first is that even though their operating profit was affected, the higher sales volume of refined products helped a bit.
Okay, so that cushioned the blow somewhat.
Exactly. The second thing is that they've been really focused on improving their efficiency.
Makes sense.
And they've been optimizing their capital expenditures, making sure they're spending their money wisely.
So being careful with your investments.
Yeah, and you can see that reflected in their cash flow statement.
Oh, how so?
Their cash flow from operating activities was really healthy, over RMB 200 billion.
Wow, that's a lot of cash.
It is. That's got to be reassuring for investors.
Definitely. It sounds like they're doing a good job of weathering the storm, so to speak.
They are. And they've also managed to keep their financial position stable, which is impressive considering all the ups and downs in the market.
Absolutely. But they're a public company, so how are they keeping their shareholders happy?
Well, Sinopec is known for being pretty generous with their shareholders. For 2023, they declared an interim dividend of RMB 0.145 per share.
Okay.
And they're proposing a final dividend of RMB 0.200 per share.
So that's RMB 0.345 per share in total, right?
Got it. If you do the math, that adds up to a total dividend payout of RMB 41.25 billion.
That's a pretty hefty sum.
It is, and it shows they're committed to giving back to their shareholders. But dividends aren't the only thing.
What else are they doing?
They've also been actively buying back their own shares for the past 2 years, both domestically and overseas.
Share buybacks? Why would they do that?
Well, it's a way to reduce the number of outstanding shares, which can increase earnings per share and potentially boost the stock price.
Okay, so it can make the stock more attractive to investors.
Exactly, and it also signals that they believe in the company's future, which is always a good sign for shareholders.
Right, it shows confidence. Their report actually mentions that these buybacks are part of their strategy to protect their market value and shareholder interests.
It's all about looking out for their investors.
Smart move. So we've talked about their business segments, their financials, and what they're doing for shareholders. What's next for Sinopec? What's the big plan?
Their strategy going forward focuses on 3 main things: improving development quality, enhancing profitability, and stabilizing growth in 2024.
Okay, so kind of a 3-pronged approach.
Exactly. And their main strategy for achieving those goals is leveraging their integrated advantage and coordinating their value chain.
So using what they're good at to overcome challenges and create value.
That's the gist of it. Their integrated model allows them to control different parts of the energy and chemical process.
From production to distribution.
And by coordinating all those different stages effectively, they believe they can stay ahead of the curve.
It makes sense to play to your strengths. But they also talked about new growth drivers. What are those exactly?
This is where it gets really exciting. Sinopec wants to become the top dog in hydrogen energy in China.
Hydrogen energy, huh? Everyone's talking about it these days.
And for good reason. It has the potential to revolutionize the energy industry. And Sinopec isn't just dipping their toes in, they're going all in.
Okay, I'm intrigued. What exactly are they planning to do?
Well, they're expanding their recharging network, creating a directly operated platform, basically building the infrastructure for a hydrogen-powered future.
Wow, that's a huge undertaking.
It is, but they're thinking big. They're looking at hydrogen production, storage, distribution, refueling, the whole shebang.
It's like they're building a whole new energy ecosystem.
That's a great way to put it. Of course, there are challenges. Hydrogen technology is still pretty expensive.
That's what I was thinking. How do they plan to make it all work financially?
They're hoping government support, tech advancements, and economies of scale will help bring those costs down.
So it's a long-term bet, but with a potentially big payoff.
Exactly. It's a bold move, but Sinopec seems up for the challenge.
So hydrogen is a big part of their plan. What other growth drivers are they focused on?
They're also really into digital and intelligent transformation. They're putting a lot of effort into strengthening their ProMass industrial platform.
ProMacy, that sounds pretty high-tech.
It is. It's a software platform that uses data analytics and AI to optimize their operations.
So it's like their brain helping them make better decisions.
Exactly. It helps them improve efficiency, reduce costs, and basically stay ahead of the game in a constantly changing industry.
So they're not just investing in new technologies like hydrogen, they're also making their current operations smarter.
That's right. They're approaching the energy transition from both sides, developing new energy sources, and optimizing their traditional business.
It's a two-pronged approach. Makes sense. But with all this talk about growth and profits, are they doing anything to address the environmental concerns?
Absolutely. Sustainability is a big part of their future strategy. They have a whole carbon peak strategy in place.
Okay, so what does that involve?
They're focused on conserving resources, reducing emissions and pollution, and developing green and low carbon technologies.
So it's not just a PR stunt, they're actually taking concrete steps.
Oh, yeah. They're serious about this. They're even investing in carbon capture, utilization, and storage technology, CCUS.
CCUS, what is that?
It's a way to capture carbon dioxide emissions from industrial processes and either store them underground or use them for other things.
Interesting. So they're trying to make their operations more sustainable.
It's not just about being environmentally responsible, they see it as a business opportunity too.
It's smart to think long-term like that.
Mm.
So they're investing in new energy sources, embracing digital transformation, and committing to sustainability.
Mm.
It sounds like they have a lot going for them.
Yeah.
But what about the challenges? What hurdles might they face in the future?
Well, the global economy is always unpredictable. Things like geopolitical tensions, trade wars, and the energy transition itself can throw a wrench in their plans.
So those are the external factors. What about internal challenges?
They operate in a very competitive market, so staying ahead of the curve requires constant innovation. That means investing in R&D, developing new technologies, and adapting to changing consumer demands.
It's a constant race, it sounds like.
In a way, it is. And they also need to be careful with their investments, make sure they're getting good returns, especially on those new growth drivers like hydrogen.
And of course, they need to attract and retain top talent.
That's right. The energy industry is changing so fast, they need the best and brightest to stay ahead.
So a lot of challenges to overcome, but let's focus on the positive.
Yeah.
What are the biggest opportunities for Sinopec?
Well, they have a close relationship with the Chinese government, which can be a big advantage, and they're strategically positioned near their main consumer markets.
So they have a good understanding of the local market.
Exactly, and their integrated business model gives them a lot of flexibility.
To adapt to changes.
Exactly. And of course, their push into hydrogen energy could be a game changer if they can pull it off.
So a lot of potential for growth. It's fascinating to see them not just adapting to the changes in the energy industry, but actively trying to shape them.
Absolutely. Their commitment to innovation, sustainability, and shareholder value is impressive.
It's inspiring to see a company like Sinopec pushing the boundaries and striving for a cleaner energy future.
Agreed. They're not just surviving, they're thriving in the midst of all this disruption.
So to wrap up this part of our deep dive, what would you say are the key takeaways for our listeners?
For me, it's their resilience, adaptability, and forward-thinking approach. They're facing some tough challenges, but they're finding ways to overcome them and position themselves for success in the long run.
They're a company to watch, that's for sure. And with that, we'll take a quick break and come back to explore some other interesting aspects of Sinopec's business. Stay tuned. Okay, so we've talked about their big picture strategy, but I always find it fascinating to see how these massive companies actually manage their money. Let's dig into those financial statements a bit more. What can you tell us about their balance sheet?
Well, at the end of 2023, their balance sheet showed total assets of over RMB 1.45 trillion. A big chunk of that is tied up in property, plant, and equipment.
Which makes sense, right?
Yeah.
Their operations are so capital intensive. Trillions of RMB. That's a mind-boggling number. But what about the other side? What do their liabilities look like?
A significant portion comes from long-term borrowings. It's pretty common for companies in the energy sector, especially those involved in these huge projects.
So they need access to a lot of capital. Makes sense. Now let's look at their income statement. What about their revenue and expenses?
Their revenue for 2023 was just over RMB 3.2 trillion.
Like we discussed earlier, a bit lower than the previous year, mostly because of those lower oil and gas prices.
Right.
But were they able to control their costs at all?
They did. Their cost of sales also decreased, which suggests they've been implementing some cost-cutting measures.
To offset those lower energy prices.
Exact.
Smart move. So tightening their belts a bit, what about their profits then? How did they end up in 2023?
Well, their profit before taxation was around RMB 83.9 billion.
So down from the year before.
Yeah, and again, those lower crude oil and natural gas prices played a big part in that.
So even with cost cutting, those lower prices really took a bite out of their profits. Must be tough to operate in that kind of unpredictable environment.
It definitely has its challenges. You can see it in their financial statements. There's a decline in operating profit, too, mainly because of how those energy prices hit their upstream operations.
Upstream operation.
Yeah, that's their exploration and production activities.
Got it.
But there's a bright spot here. Their report highlighted that the increased sales volume in their refining business actually helped offset some of those negative effects.
So even with those headwinds, they found a way to compensate a bit.
Exactly. They're a resilient bunch. But at the end of the day, cash flow is king. So what does their cash flow statement tell us?
Let's see. This is more encouraging. Their cash flow statement for 2023 shows really strong cash flow from operating activities.
Over RMB 200 billion.
Wow, that's impressive. What contributed to that?
Depreciation and amortization played a big role. Also, the positive net changes in their working capital helped.
So they're effectively turning their operations into cash,
Yeah,
even with all the market ups and downs.
exactly. And that's due in part to their focus on improving operating efficiency and optimizing their capital expenditure,
Right, being smart about how they spend their money.
which then allows them to pursue those ambitious growth initiatives we talked about, like hydrogen energy, expanding refining capacity, and digital transformation.
It's all connected. And of course, we can't forget their commitment to shareholders with those generous dividends, over RMB 41 billion.
Absolutely. Those dividends plus their share buyback programs really demonstrate that they're serious about rewarding their shareholders and increasing the value of their stock.
It's been quite a journey exploring Sinopec's 2023 performance. We've covered a lot of ground, from their diverse business segments and their financial results to their shareholder-focused initiatives and plans for the future. Any final thoughts you want to share with our listeners?
I think the key takeaways here are Sinopec's resilience, their ability to adapt, and their forward-thinking approach. It's a complex and constantly changing environment they're operating in, but they're navigating the challenges and finding opportunities to succeed.
It's inspiring to see a company like Sinopec pushing the boundaries like this and striving for a cleaner, more sustainable energy future.
Couldn't agree more.
And that brings us to the end of our deep dive into Sinopec's 2023 performance. We hope you found it as insightful as we did. We'll see you next time for another deep dive into the fascinating world of business and finance.